You're listening to Toronto's #1 real estate podcast, powered by Watson Estates. The most successful local real estate investing starts right here, right now. Here's your host, broker, investor, and social media influencer, Bradley Watson.
Good morning, investors. Bradley here from Watson Estates. It's a beautiful day, and yesterday was a beautiful day to get outside. If you haven't, please do enjoy the fresh air. Enjoy those free paths that have been set up with no vehicles that you can kind of walk and enjoy in the city of Toronto. And parks are going to start to be reopening. We've got so many great things going on. If you're not enjoying the nice weather, you're really missing out. Today, I want to get into talking about Toronto real estate as we do every morning, going through some of the most recent news that have come out in the last 24 hours to bring you guys up to speed on what's been going on and also to give the perspective from a realtor. And I'm researching for myself, so we're learning together during this very unusual time in Toronto's history with the pandemic and the closures. So today, I want to start off talking about an article, and I want to answer the question, are we really sheep? Bah. Every time I think of the sound of a sheep, it reminds me of NSYNC. Ba, ba, ba. It's a terrible link. Just can't get the 90s out of my head. But I want to answer the question, are we all, what are we planning on doing? Because this article is called 34% of Torontonians still say they want to buy a home in the next 12 months. So are people still in a position where they want to buy, or are they all freaked out? What does that look like? And then I want to jump into this article that's coming out of CMHC. They had this kind of press conference thing, and actually I think they were speaking to one of the federal government bodies, and they're now being used. All these quotes that were said are all over. They're plastered all over the news. So why does CMHC expect an 18% drop in prices? Because that's what they're anticipating. And so I want to break down why they think that and what they're doing. And then, is Toronto in line with the GTA in its reopening? I think you guys would be surprised to find out that not every city in the GTA is reopening at the same pace. So I want to talk about what that looks like, what we're doing here in Toronto, and what we can expect will happen in the Toronto housing market based on that. So again, thanks guys for tuning in. We are #1 on Google Podcasts for Toronto real estate, all thanks to you guys. Leave us a thumbs up if you're on YouTube. Give us 5-star review, and we're going to continue to put out great content every morning. We're learning too. We're going to do the research. We might as well share it with you guys. And at the same time, we actually unlocked a video. Yesterday, we did it on YouTube. And today, this morning, it should have been uploaded. I got to double check on our podcasts, anywhere you get your podcasts. And you can find what it's about is analyzing what's happened in the Chinese real estate market. And I've had a bit of discussion on how applicable that is. But let's face it, guys, what better country do we have to see what happens with the reopening? China was a booming real estate market on a global scale. Toronto is becoming global in nature, and it's now experiencing the same closure. So to see what's been happening there has been very valuable, at least for me, in understanding what could happen here in Toronto with the reopening. Okay, so let's get into more recent news, more local news, talking about what people's perceptions are of our marketplace. So this article from Toronto Stories is called 34% of Torontonians still say they want to buy a home in the next 12 months. We got to dive deeper into this article. So don't just take the headlines. I think that's one thing I'm kind of learning as we've been studying a lot of these articles is don't just read the headlines. Read a little bit further. If you're going to read the headline, read further. Despite the uncertainty the COVID pandemic has caused for Toronto's real estate market, residents are still interested in buying a new home in the coming months, according to TREB. And that's the funny thing, too. That first part is according to TREB. Almost like when I hear it's according to TREB. But now what I think of, because there's so much criticism about it being a real estate board, it kind of is position. But then when you read further, the next paragraph, TREB contracted Ipsos Public Affairs to conduct an online survey. So TREB didn't do the survey. They contracted, but then you can make an argument, well, they're the ones that placed the order for the survey, and they're the ones that ultimately analyzed it because they're trying to provide information to their membership and to our community. I had a comment actually, and I get these comments often. Someone pretty much saying, well, you know what? I don't trust realtors and I don't trust brokers, or, I don't trust any of you guys for information. But it came to mind. I'm like, where are you getting your information from? You can publish, you get forecasts from outside sources, but generally speaking, information as far as what's happened and historical information comes from the boards. That's where it comes from. So to say you're not gonna accept the statistics is I think that's a little ignorant. But I understand that there is definitely everybody has a bias, and the real estate industry does as well. So I get the concern there, but guys, when we have statistics, we have to use these statistics. You can't hide your eyes from them. So when we see surveys like this, which is generally, it's asking consumers, this is our best gauge. Like, where else are you going to get, other than asking people, where are you going to get this information? So here's a highlight I wanted to share with you. Even with home sales and new listings down, 27% of survey respondents in the GTA said they were more likely or somewhat likely to purchase a home in the next 12 months. So you remember our article title was 34. So wait a minute. So we got 27, but that's the GTA. Where it goes up to 34, and actually before we move on from there, the GTA in spring 2019 was 31%. So we're in line, but we're actually slightly down from last year. But in Toronto, it sits at 34%, saying they are very likely or somewhat likely to buy a home. So the demand, from what I can see in the GTA, this is good too, because it tells us what's happening in Toronto versus the GTA. The demand for buying in Toronto is stronger, or the incentive now, obviously there's been bigger price fluctuations. The desire is for people to buy properties that are closer to the city. Home buying intentions are stronger for younger people aged 18 to 34. Guess what, guys? For any of you who think young people are never going to get into the real estate market, 45% of them, I mean, they're optimistic generally too, but 45% of them want to buy in the next 12 months. And for those with children, 37%. So it's young people. What I'm seeing from this stats, if I were to just kind of take a step back, it tells me that the lower end of the market is likely going to be the most active over the next 12 months. And in any typical strong, healthy real estate market, that's where you start, because the first-time home buyers need to get in our market. And then as those sales have happened, then you get the move-up buyers. So we'll get to the confidence in selling in a second. But for those who said they didn't want to buy over the next 12 months, the top concern was actually general affordability. So this is why a lot of people shouldn't have been doing anything during the pandemic. This is why I think a lot of people have sat on the sidelines and that was a good thing, because I don't think everyone is financially capable of doing that. While 62% of respondents said they liked their current home, so another majority is that they don't want to leave because they like where they live, because we're in an awesome place already. And 16% said they didn't want to move due to COVID-19 related issues. So out of 100% of people who didn't want to move, only 16% the reason was because of COVID-19. So for those of you who think, because we've had sales drop by 60%, you cannot blame all of that on COVID and the fear of COVID related issues, like the actual virus itself. The concern is outside of that. It's bigger than that. And I think it comes back down to like what we saw in 2017, which is a lot of psychological and uncertainty, right? Uncertainty scares people away from a marketplace. Home buying intentions have remained quite stable, certainly suggests many people will be looking to satisfy pent-up demand for ownership. So we've kind of ongoingly, we talk about this idea of pent-up demand, right? Like all this demand that was there, is it still going to be there? And if anything, this article confirms that it is there and it will be there. That's what I'm getting out of this article. And so don't knock down that the demand won't be there on the other side, because we're hearing it from consumers that it will be. Consumer confidence will improve, and a growing number of people will look to take advantage of very low borrowing costs to purchase a home, right? Because now we've also got additional factors to make it easier. Up until recently, when we get into CMHC, you'll see how they're maybe pulling back a little bit. But up until recently, all decisions have pretty much increased the demand because they've made it easier to qualify for a property. But 17% of existing homeowners said they were likely to list their home in the next 12 months. So wait a minute. So here, check this out, guys. So when we hear these numbers are balanced in the buying and selling side, when we hear young people want to buy 45%, we've got overall 34% demand in Toronto, but then we pair that up against who wants to sell, 17% were likely to sell compared to 32% in 2019. So if you think the spread in 2019 was bad, because what did they have in 2019? Let's pull back our numbers here. They said in 2019, 31% wanted to buy and 32% wanted to sell. So we saw a balance last month as far as I'm willing to go in and I'm willing to come out. But this year, coming up based on the stats, we've seen almost it split in half, the number of people who want to sell. So you could make a case, you could make a pretty strong case based on just these facts alone that it actually will get worse in 2020 than 2019, just given that people don't want people coming through their home and they don't want a whole bunch of traffic, but yet they're comfortable to go out and look at other people's homes. very interesting how that's kind of played out. A very large portion, 80% of residents indicated they were unlikely to list their home for sale simply because they like the home. So they're saying that only 22% actually were because of COVID-19 issues. So again, not as much as I would have thought, right? Like if we've got 20% not doing it, 22%, I mean, I would think that would be bigger, right? Like for me, that seems like a bigger concern than maybe it is. Maybe it's not as big as we initially thought. So even on both sides, on the buyer and seller side, there's generally seems to be a low impact of COVID-related issues. So then the survey, I'm just going to give you one more of the big highlights here before we move on. 82% of respondents support increased and more flexible access to. Okay, so what I wanted to dive into here is as part of the survey, they've asked people their comfort level in supports because they're finding generally the assistance for home buyers hasn't changed, this public support for it, right? People want government to support buying because I think people realize that this is just a little bump in the road and affordability will continue to be a challenge on the other side. And here's this is the breakdown. So 75% support relief from municipal and or provincial land transfer taxes. Very interesting that number is as high as it is because of, if you guys remember our podcast yesterday, I had a conversation with the MPP, provincial MPP, a conservative from Streetsville. And on the call, I asked about the land transfer tax, and she seemed to tip off that something was coming. Whether it's municipal, probably not. It'll more likely be provincial, but I think something might be coming because that, out of a full list of what they gave, that is the one that has the most support for relief. Because let's face it, our land transfer taxes are crazy, and it's going to become a interference for people who are trying to purchase a property. It's a big price tag. But then we've got support for a registered retirement saving plan through home buyers plans. 73% support municipal property tax relief. We've talked about that in the past. I can't see that happening just based on costs that are going to happen every year, right? And we heard that from Crombie in the podcast yesterday. Go back and check that out as well. 71% support relaxation of federal mortgage insurance rules to allow home buyers the option of qualifying for a mortgage with smaller down payments. So they want more options from CMHC, which we're going to talk to in a second because CMHC has its own things to say about that, and they're actually opposite of that. So if you expect a relaxation of the mortgage insurance rules and the guidelines, I don't think you're going to see that based on what we've just heard. And 65% support relaxation of the federal mortgage stress test. Again, not a lot of talk of what's going to happen there, but I can't see them making it easier right now. And let's talk about why. This article comes out of TorontoStories.com. CMHC is now forecasting up to 18% drop in average house prices as a, quote, deferral cliff looms. When CMHC starts saying cliff, you got to really watch out. I was saying back when we were taking kind of a survey of all the forecasts, and CMHC, even back then I said, was the most surprising to me. Like I was a little bit surprised. And the way that I kind of wrote off was, they're talking about Canada. And I was thinking, well, maybe they factored in Toronto. But as I'm kind of listening to what they've said here, I don't hear mention of Toronto. I don't hear mention of specific cities. It does seem to be on a national basis. But it's still important to know because what they're anticipating will come out of a national price change is going to impact the decisions that happen to qualifying for mortgages here. And I think that single-handedly is going to be the biggest piece we're going to take out of this article. So check this out. CMHC CEO Evan Siddall said the Housing Corporation is now forecasting between a 9 and 18% drop in average house price over the next 12 months. Again, this is talking Canada-wide. Through the COVID-introduced relaunch of the Insured Mortgage Purchase Program, a coordinated effort with both the Bank of Canada and the Department of Finance, CMHC stands ready to purchase up to $150 billion of insured mortgages. So they're standing ready. They've got a bunch of money approved to spend to try and save the day. And so I think that when they kind of see these as like this is what we are forecasting to drop, you know that it comes with the backstory, but we're prepared to save it, right? Like that's kind of what I'm hearing here. But an important note, I mean, there's going to be extreme fluctuations in major cities like Toronto and Vancouver. But from what we've seen, like back what happened in China, again, back to just another plug for our podcast we did this morning, we saw that the first and second tiered cities seemed to rebound substantially quicker than the smaller areas. Now it's because they probably took the bigger hit too, but that fluctuation will happen faster in those areas as well. This is in combination with the agency's effort to work alongside private mortgage insurers to provide a temporary deferral of mortgage payments for up to 6 months. So this is kind of where the article then goes. It starts talking about this deferral program we have, and you guys know about it. It's actually being used by 12% of mortgage holders. And that they're saying that number could rise as high as 20% by September. Okay, so in a worst case scenario, 1 in 5 Canadians will be deferring their mortgage. And they mentioned an aside here, they're supporting a full stop to eviction. So they're agreeing with the idea of residential stopping of evictions. I wonder if that actually includes commercial. I wouldn't be surprised if it does, because they're calling it a full stop to evictions. Maybe. But I definitely know that includes residential. But as Siddall points out, all of this is being done through borrowing, lending to historic levels of household debt. Okay, so for those of you that are sitting, ripping out your hair because you're like, Bradley, you haven't talked about debt. Like, you're talking about CMHC, you have to talk about debt, right? Like, this is where this conversation happens. Check these numbers out, folks. The ratio of gross debt to GDP for Canada is at 99%. So we have debt levels equal to a year of production from our country. National debt intensifies the drag on GDP growth once a threshold of 80% is crossed. So we're way past that 80% that they're saying is when it counts. And they added the CMHC expects the ratio to grow to more than, listen to this, 200%. Oh, 200%. Now, is that because GDP is lower? Is it because our debt is higher? It's definitely both. Definitely both. Man, so you thought it's already high. It's going to get higher, guys. And CMHC knows it, and this is all being factored in here. The resulting combination of higher mortgage debt, declining house prices, and increased unemployment is cause for concern for Canada's longer-term financial stability. A team is at work within CMHC to help manage a growing debt, quote, deferral cliff that looms in the fall. We've had other articles we've covered that talk about the banks, and the banks are getting very tight on line of credits. And I know in the private lender, having talked to some brokers as well, they're getting more strict. They're expecting more money down for those. You can't just jump in at, like you can't. I think they're actually asking for a minimum 80% plus. Like I think they've actually gone like 85%, or I guess it'd be 75%. They're getting really strict. Now, this is a while ago that I talked and asked people about this, but on the mortgage side, it's definitely been tight. And it's all due to this fear by the banks of the stopping of deferrals. Like right now, people are just deferring it, kicking it down the road, adding to our debt levels, and not needing to pay anything because they're working with CMHC. They're working with the government of Canada, these banks. But when that stops, money comes due, when you got to pay the piper. Are people going to be in a position, will they have their jobs to sufficiently cover the costs of these arrears, of the mortgage, which now is going to have increased price tag? Can people pay for that? And the CMHC is very nervous about this. And so it comes back down to this balance, right? And this, when we kind of talk here on our podcast, I think the biggest thing I'm wondering is, where is another shock going to come from? Because I think if the train keeps moving, things aren't going to change. What would need to happen would be some kind of significant shock. Does it come from the rental market, where people aren't able to even get a rental in their long-term market, so they add inventory to the market, boosting inventory? Or does it happen in a place like this, where the balance of the government support and the employment aren't together, right? Where we don't have this tag team where all of a sudden you're pulling people off the support to incentivize them to go get a job, but then the jobs aren't waiting for them, right? And we're also seeing in articles, there's one here that I had from the Star, the wage subsidy and commercial rent assistance programs, they aren't taking. Like people aren't responding to these programs. These are the two single biggest programs to try and boost employment, boost jobs, and keep businesses in place, and they're not working. The article is called Justin Trudeau Pleads for Businesses to Please Rehire as Government's COVID-19 Wage Subsidy Sees Slow Uptake. The government has touted the wage subsidy as one of its marquee aids. Marquee aids? That's definitely French. So glad I ran from French immersion. I guess I should have stuck it out for the sake of you guys on this podcast. I'm going to go with marquee aid program for the pandemic crisis designed to keep workers on company payrolls. But data published by the CRA suggests it is being used less than expected. Oh, that's an understatement. Listen to this. Less than $3.4 billion of the program's original $73 billion budgeted. Like, what's the statistic on that? Like, that's so low. What is that, 5%? Something like that? That's crazy. Nobody cares, right? Nobody's using it. Nobody's hiring people back. It's not helping the employment. And I'm not going to cover the commercial assistance side because we totally jammed that down our throat yesterday talking about rents, but that's not taking either, right? Like people, it's not working. So what they're suggesting, CMHC, as we kind of pick up our other article again, is even they're essentially saying that given like we know things are tough, we know affordability is difficult, but our solution here is tougher mortgage guidelines. Listen to this. CMHC is even considering restraining their underwriting policies to limit excessive borrowing while also taking urgent action to accelerate the supply of rental housing. So if you think it's going to get easier in rental housing, well, not according to CMHC. And so as much as it's like affordability is an issue, like you remember this article started off talking about how we wanted to try and support people. Actually, I think that was the last one, right? People generally want affordability to be assisted because we know affordability is going to be a struggle on the other side. But at the same time, the CMHC is looking at it and saying, well, but our debt levels are astronomical. They're going to double in the next year relative to GDP. So we have to protect people like the first-time home buyer. There was an article here. I'll jump down to it. This is thinkpoll.ca. I do not know how legitimate this news article is. I read the title and I was so intrigued by it, but there was nothing about it but what they're saying here is Canada looking to increase minimum mortgage down payments from 5 to 10%. What they do, so they didn't mention in the article. That's the first place and only place I've seen that reference. So I don't know if that's true, but the point is they're going to make it more difficult. That's true. Unless we act, a first-time homebuyer purchasing a $300,000 home with a 5% down payment stands to lose over $45,000 on their $15,000 investment if prices fall by 10%. That was a quote actually from the same fellow at CMHC. So they're trying to protect the little guy, right? And we're trying to, the way that they summarize it here, actually Better Dwelling, I think, did the best job summarizing this. So I wanted to share their view on it. The CMHC is delivering general risk advice that can be summed up as don't take out too much debt. The higher the debt load of a household, the more vulnerable you are in a downturn. This downturn is expected to be the largest since the Great Depression, so it's probably time to buckle down. I love how they go just like so extreme, right? But thanks, Better Dwelling. We know you guys like your crashes, and so the point here is don't take on too much debt. Stop taking on debt. Now, people, this is maybe a rough time to try and preach that gospel because, I mean, it's a time like this where you wish you hadn't. But let this be a lesson, guys. Maybe some of you young people, I know it's hard to change that mindset, but do not borrow money, right? If you're borrowing to purchase a property, that's one thing. You've got a fixed asset behind it. But like there's a difference between consumer debt and mortgage debt. I think we need to highlight that. But that doesn't mean that you go and you overspend on your property either. Like we need to be sensible here. We need to make sure we're stable and we need to have reserves in place as well, especially those of you who are considering investing in properties. And as mentioned, banks are already preparing for this transition and shock. So we're going to move on from there. Very interesting kind of battle that we have happening between affordability and the high likelihood of a rebound versus across Canada, a fear of things going sideways and therefore tighter guidelines, which would ultimately affect our local market too, right? Because if people aren't able to purchase properties at a lower amount anymore, now all of a sudden the qualification gets harder and that will affect demand. But I mean, we've got demand in droves here in the GTA. Okay. Let's move on and talk about the reopening. I like kind of covering this off when there's some news. And Toronto, there's definitely news for reopening of sports amenities in public parks this week. The City of Toronto is reopening sports amenities in its parks this week, including sports fields, basketball and tennis courts, and BMX or skate parks, but says team sports are still off limits and physical distancing must be maintained. Between today and Saturday, more than 850 individual amenities will reopen, including 300 soccer fields, 600 tennis courts, 300 baseball diamonds, and various picnic shelters. Again, another step by the city, as in step with the province, also doing reopenings to encourage people to go out, try and lead a somewhat normal life, which is giving confidence to people, right? Like if now I'm less worried about those couple streets they opened up with it being slammed with people because now they're at the parks. Now I'm a little more confident. I got a little more breathing room. I'm feeling a little more safe. And I might go out and look at some properties, right? And this is kind of where I think it all links back together. And this is why I don't think, this combined with the fact that I don't think people are freaked out by COVID-19 in general. But what I did want to point out about this is we see articles like this and we're like, oh, okay, great. Like province is opening, Toronto's opening. We're good. We're like, things are opening up slowly, but they're opening. But guys, I just want to remind you that this isn't the case in all surrounding cities. There's an article came out of CP24. Reopening of retail sector may have led to jump in new cases in Peel region. Check this out. Peel Region's top public health official says that he is growing increasingly concerned that the province's plans to restart the economy may be, quote, out of step with the risks still posed by COVID-19 in his community, talking about Peel. During a weekly briefing at the Brampton City Hall on Wednesday, he said that while the numbers of new cases of COVID-19 have been on the decline in Ontario as a whole, they have remained stubbornly high in Peel Region. When we were talking to Crombie yesterday, the mayor of Mississauga, she mirrored this exact same thing. She's also freaked out by this. Over the last week, about 20% of all new cases in Ontario have been reported in Peel, despite the region only having about 10% of the province's population. So we are like booming over in Peel for cases here in the GTA. So Brampton has decided that they won't reopen dog parks as they've done in the municipalities like Toronto. And so we're seeing very different pressures on different local markets, not just provincially, but locally here in the GTA. And so, yes, Toronto is reopening, but we need to wait and see how this COVID thing goes because let's face it, Brampton and Toronto, they're very close, right? And Mississauga, Toronto, very close. So that'll be interesting to see how that reopens and how they kind of decide to do things. And again, this additional second shot could be a spike. But then the next question is with the pandemic being in different markets done differently, will that affect the real estate prices and market in different cities differently? And I think that there is a possibility of that, but time will tell. Like ultimately time will tell. In the meantime, we're all just a bunch of sheep listening to the news. And so have yourselves a great day, sheep. Bye-bye for now. I'll see you next time. Take care and keep it real.